Hi everyone, welcome to the MyG Trades channel. My name is Johar. Welcome to another episode of Weekend Technical Analysis. So last week we concluded our episode with BEML, and this week's been really tough. Actually, the last 2 weeks have been really tough for the market. Everything's been going down, but let's see if we can find any trading opportunities quickly. We'll keep this session short because I believe a lot of stocks would have just fallen, and I don't think there's going to be a long trade for a significant amount of time. But still, let's have a look at what's next in our charts, and let's just try and understand what's happening in different stocks. So last week, as I said, it was BEML that we ended the episode with. So moving over to JUSTDIAL, and we are looking at the weekly chart right now, and we're looking at the last 5 years worth of price action. Let's go a little longer and let's look at the monthly chart, and we can clearly see that this zone over here is back in the days, this was a pretty tough resistance zone, right? From 2017 all the way till February 2021, this entire area was a resistance zone. Breakout happened in February 21, and that breakout sustained, right? Unlike the fake breakout that happened here in 2019, this breakout sustained, and now it's retesting the same level. It could be potentially making sort of a double bottom over here, or you could read it as a double top as well, because you can clearly see a M sort of formation here as well. So if this level is broken, then you can see a further fall down to 500 or 450 rupee levels. However, if this support is sustained, then a short-term trader can potentially take a view for up till this resistance, this red candle that you see here. This is going to be like the most recent resistance where it will try and possibly pull back. So that's a gain of 24%. which you could potentially take in JUSTDIAL. So that's the view on JUSTDIAL. Now moving over to Equitas, small finance bank. Okay, so this let me switch over to the weekly chart, please. Okay, so the stock's been in a downtrend since October last year. We can clearly see that there was a clear downtrend channel that the stock was following in. So this was a channel that was moving in, and a breakout happened on 4th of April, in the week of 4th of April, and since then it's been consolidating in pretty much the same range over here. So this stock is definitely much more positive compared to where Nifty is right now, and the RSI has also been consolidating above 45. So that's a decent sign. I wouldn't say this chart is super strong, but definitely any breakout above this 57 rupee zone, this 57-58 rupee zone, and you could potentially see the stock go and retest this resistance area and potentially give a gain of maybe 22%. So there are two resistances that I can see here. One is this level, which acted as a resistance first, right here, and then second would be this level, the most recent resistance, which would act as a resistance. So in case there is any pullback in the market, there is a good chance that this stock might break this consolidation and go and try and test this level. So that can be a potential short-term trade. Let's move over to JKLAKSHMI Cement. Nothing really impressive over here. The stock has come down to this major support line over here now. Hopefully the stock will bounce from here, because if it does not, then we can see a complex head and shoulder pattern that we can clearly see here. So if you draw the neckline this way, you can see that this is the left shoulder, this whole thing is the head, and this is the right shoulder, and this breakdown happened over here. So as per this pattern's target, the stock can go down till let's see, let me change the settings here. Okay, there seems to be something wrong in my settings, because clearly this doesn't look right. But in any case, let me delete this. But in any case, I can see that there is a head and shoulder pattern here. So this fall of 715 rupees till this neckline of 400 rupees, so close to a 300 rupee fall can happen. It's not unreasonable, and if that does happen, then this stock could be touching could be going through a very deep correction. It is unlikely that might happen, but if it does, then this is actually the likely target that the stock can go down to till 100 rupee levels also. So yeah, I think the market is going to go through some terrible pain in the coming days. Moving over to Edelweiss, Finserv, again nothing really great over here. It's trading at rock bottom levels, so better to avoid this kind of stock. Looking at HOMEFIRST Finance, then we can see there was a clear downtrend channel in December 2021. Then this channel was broken in the month of March, and then now has been consolidating in this zone. So obviously any breakout above this level of 800 rupees, and you could go and it can potentially retest this level of 921 rupees. So that's the only trade I can see here. Moving over to SIS Finance, then we can clearly see that this stock has been consolidating in this price range since July last year, and this range is pretty deep. It's a 25% range that we can clearly see. So if in the market correction, if this stock comes down to these levels, you can potentially buy this over here if this level is not broken, and hold it till here and sell it up over here, and just continue making those profits. Because if someone had been doing that strategy, they would have been made a pretty significant amount of money just by trading in this stock and doing nothing else. So that's one potential trade that you can take. Moving over to PNCINFRA. Over here also it looks like there is a complex head and shoulder pattern in the making. So if we were to draw this as a neckline this way, then this is a head and shoulder pattern, and yeah, so this breakdown has also happened here. Now hopefully this price where it is at, it is very close to this whole area, which should act potentially as a support. But if this support is broken, then I would be much more confident that this head and shoulder pattern is activated, and you can see the price go down even further. Moving over to MMTC, I don't see much happening here. Clearly the stock has corrected quite sharply, and it's at currently this major support zone. If this level is broken, then there can be further pain, but if this level holds, then it can again go and retest this previous resistance line. So that's about it. Supreme Petrochem. Okay, now this chart is interesting. I mean, wow, I think this is the only chart that I've seen in a pretty long time that has only corrected by 2% in the market in the last week's sell-off. Now this is a bearish engulfing candle because it's completely engulfed the previous green candle which was made in the previous week, but definitely a very strong consolidation that happened in this price range since the month of April last year. So there's 1 year worth of consolidation that happened here. Breakout happened in the month of March. In the second week of March, it moved up by close to 10-12%, and now it's taken a pause over here. Let's see if the stock retests this level. This would be an excellent buying zone, and ideally the simplest target that we can potentially calculate right now is just the depth of this fall, and put it up over here. So then, okay, so actually the price has sort of hit this target already. So if it does come and retest over here, it would be maybe a good buying zone, and it can go and retest this level again and make a double top and then finally crash down. But as of now, I don't see any trading opportunity because this target has already been hit, and that with good volume. But let's see, there should be a good trade over here if this stock comes down to this level. So I'm going to add this to our tracker. I'm going to track this stock because it definitely looks extremely strong in the kind of market that we currently are in. So the month is May. Today's date while I'm recording this video is Sunday, 15th May. The current price is 921.30. Okay. Only corrected by 2% in a super bearish market. Can take position if retests. Let's see, what level are we? Retests. What level is this? It's 825 rupee levels. Retests 825 to 815 level. All right. So our target entry price in this case will be somewhere close to here, 825, which is the upper end of the consolidation range. Our target again will be the same target that apparently has already hit. So now 1027. So the potential gain is for 24%. Our stop loss over here will be the bottom of, let's see. Okay, so the stop loss here in this case would be 796 rupees. So the potential loss is 3%. We are currently waiting for entry. Okay, moving on to RattanIndia. So there seems to be a pretty strong recovery that happened. So let's move over to the daily chart. Okay, and we can see that there was a nice pullback, very nice big bullish engulfing candle of 19.84% that came in on the last trading day of last week, which was Friday. However, these type of candles have formed in the past in this chart, as you can see here. You can see here also. You can see such big candles over here on this end, but ultimately the stock has never been able to cross its previous high since the month of January. So I'm not sure if this looks like a decent trade. In fact, since August, it's been making lower highs. So this was a lower high here, this was a lower high here, and this is the next lower high that it's made. Now it's also given a closing this week below this level. This level should have ideally acted as a support zone, but it has given a closing below that. So the chart structure looks weak all around. Even with this large pullback that happened, it might go back up again, be above this level. But even if it does, I think it will just go and test this 49 rupees level and then just fall back down. So let's also take a quick look at the fundamentals of the company, since I am not sure what this company does. So RattanIndia Entertainment. Okay, is this it? 37.45. Yeah, this is it. So okay, so it has enterprises, sorry, not entertainment, enterprises. So it's a like thermal power plants, investment of Revolt Motors, the market leader in electric motorcycles in India. Okay, so good. It's in the EV business. That's a good thing. But if you look at the quarterly sales, There doesn't seem to be any sales numbers at all, so not sure who is taking positions here. The foreign institutions are definitely interested in this. Why? No idea. And the public holding is also low. Promoters are holding most of the stake in the company. However, it's already shot up from like 4 rupees to 66 rupees, and I think it's going to correct further, so better to avoid this stock. Moving on to Garware Technical. Nothing happening here as well. In a downward channel, it made a lower high over here, and it's again resuming its downward streak, so nothing to look at. OLECTRA Green Tech also broken this support level, has given a close below it, so this stock has also become weak. EPL, same story, very weak stock. Currently at this should possibly take support over here, and if you see the price close above 198, then you can take a target till the next resistances, but we have to wait for a close above this. Looking at Prism Johnson, this stock also looks like it's weak. Yeah, don't see much momentum over here. Also, although this is a good nice green candle, it doesn't look anything promising. I mean, there was a similar candle that happened here with low volume. This candle has a decent amount of volume, but overall structure doesn't look great. Looking at Punjab and Sindh Bank, very weak, please avoid. Kaplan Point also in a downward channel right now, so if you plot this on a line chart, we will get more clarity here. So yeah, you can see this channel clearly, or this downward resistance line clearly, that the stock is currently facing. So now if I switch back to the candle view, you can clearly see that this is a very strong downward channel that it's trading in. So we have to wait for a breakout above this channel, let it break out, let it retest the channel, and then go up, and then we can potentially take a position in this stock. Moving over to Haikal. Okay, Haikal, deep correction, very deep correction. Don't see any support also in the middle. I mean, this is the only support that we can see here of 347. If this is broken, there'll be further pain, so better to avoid this stock right now. Looking at DBL, let's see here. In DBL, what's happening? DBL is also trading at the bottom. It had broken out of this small consolidation range here, which I have marked. You can see here as well. There's a small consolidation that happened here. It broke out. I took a target of till here, but obviously this trade has failed, so better to avoid this stock because it's given a closing even below this consolidation range. Now it's trading at its all-time low levels of very close to 201 rupees, so better to avoid the stock. Looking at Renuka Sugars, so this stock had given a breakout here on this candle in the month of April. It went up for the next 2 weeks, and now for the last 3 weeks it's been massively correcting. However, if you look at the monthly chart over here, this whole area looks like a pretty strong base. So if the stock price corrects in this range, then I think this price is a good accumulation zone, because the volume buildup has been pretty good for the past couple of months, right? You can clearly see that from April last year there has been some nice volume buildup, then there was some consolidation here, and then we saw this huge volume bar in the monthly candle. So this is last month's volume, so very huge amount of volume, right? This kind of volume has never been seen in the stock before, so something could potentially be happening here. So if this stock does correct further and you can get it between 34 and 24 rupees, I think it would be an interesting place to buy the stock and hold it till its all-time high targets. I mean, the target simply would be just this. This was the major resistance zone. This was it. This price of 42 rupees was acting as a resistance since 2012. So almost a 10-year long breakout that has happened last month. So the price can potentially go up till, if we take a simple range method, then the price can potentially go and touch 82 rupees. So this is definitely a good stock to buy, and especially if we can get it at lower levels, then the target would be even better. So here I'm going to keep two entry points. One entry point will be definitely the high of this red candle. If the stock manages to give a breakout above this level, then it makes a good buy. If we can get it over here between 34 and 25, then this also would make a super buying opportunity. So let's go ahead and add this in our tracker. Renuka, May 15th May, the price as of today is 44.60. 10-year long consolidation breakout with heavy volume. Can retest consolidation zone and move up. Can make for a good buying opportunity. All right, so what's going to be our target entry price? So let's see. First thing that I want is, I would love it if we can get it at 34 rupees. So I'm going to take the upper range of the consolidation as a target entry price. So 34.50. The target in this case will be 82 rupees. So 82.90. So that's a target of 140%. The stop loss will be the bottom of this channel. So 24.60 rupees will be the stop loss. And the potential loss can be close to 28%. We are currently waiting for entry. And the second entry point for the stock will be above this line. So this is 52.85. 52.85. And the target again will be 82.50. It's the same, so it's a 56% gain from here. And the stop loss in this case will be this previous breakout level, which is 42.70. So a loss of close to 19% in this case. So those are the levels for Renuka Sugar. Now moving over to rights, very limited chart. Oh, actually not very limited chart. So we have some history here in this chart, but it's been consolidating in this range since February 2020. I mean, this was the COVID crash. The stock came up to its previous pre-COVID levels, but then again crashed again. So there's no momentum in the stock right now. Shipping Corporation of India also does not look great. Also over here, if we look at it from the line chart perspective, we can see a potential head and shoulder pattern that is forming over here. So this is the shoulder, this is the head, and this is the other shoulder that is currently under formation. So if this breakdown happens, then we can clearly see a further downtrend in this stock. Looking at Cera Sanitary Ware, this has also, it's respecting this support level over here right now. This entire zone should act as a support, and it is currently respecting that. But it doesn't look very strong. The volumes are also big. There has been a good pullback though that has happened. It's made sort of like a doji candle. So it could potentially take a pause, go up, retest this level and come down. If it breaks out from 5,000 rupees, then definitely it will go and retest the previous resistance of close to 6,000 to 6,500. But in my opinion, it might just retest this level and go back down again. So that's the view on Cera Sanitary Ware. If you look at Praj Industries, then something interesting happening here as well. We can clearly see that Praj Industries was consolidating here in this range, up till Jan of this year. Then it broke out with this candle, and then for 3 weeks it consolidated above this. Then came a sharp correction, but with low volumes, and then again a sharp rally. But then again, since the last 4 weeks, since Nifty has been correcting, the stock is also correcting. But again, the volume activity is very low, while the volume activity here is extremely high. Let's take a quick look at Praj Industries shareholding pattern, because the stock has been consolidating in this zone since June of last year. So I want to understand if some big player has exited the stock while this consolidation was happening, or was accumulation happening that we were not aware of. So this consolidation started from June onwards or May onwards. So let's look at the shareholding pattern since then. So in June, the FI holding was 13.12%, and DI holding was 7%. So clearly DI sold off in March. Their position came down by close to half, and the FIs bought a little bit. Then in September, their holding went up by 15%. This further went down by 6.85. Then the FI holding here pretty much remained the same, close to 15. This holding went up, and now FI holding is further down by close to 1%, and their holding is down to 13.84, and DI holding is at 8.83. So there clearly is some selling pressure happening from the FIs in Praj Industries, and the domestic institutions are sort of taking positions in this company. And if you look at the public shareholding pattern, then there doesn't seem to be any big investor currently invested in this, at least big investor that we know of, who holds maybe less than 1%. But clearly this is in a consolidation zone. If someone already has this, if it breaks the bottom of 295, then please exit the stock. If it does not break this, then stay invested, because the momentum might continue. Because if the stock wanted to fall, it could have fallen a pretty long time back, but since 1 year it's been in this price only, it's now back in this base. It can maybe hold up, because if we look at the monthly chart, then we can clearly see that there is a pretty good support area over here, where it's consolidating above this previous resistance of 2007 only. So there might be a good chance that the momentum might continue going forward also. So until unless it breaks 296, you can stay invested. To make any new fresh positions, we have to wait for a close above 430 rupees. Looking at SW Solar, nothing happening in this stock as well. There was a lot of hope that was attached to the stock when this breakout happened right here in the month of August last year. But then after that, it just been correcting, making lower highs and lower lows. So better to stay away from this. Triveni Turbines, same story, consolidating in this range since a while now. So you can maybe buy it at the bottom of the range and sell it back at the top. If it breaks 157 rupees, then there will be fresh weakness that we'll get to see in the stock, and you can see it start correcting further down. If we look at Neath Limited, very sharp fall, extremely sharp fall that we have seen here. From the very top, it's made a correction of 32%, and you can clearly see that it made sort of a doji type of candle, or a hanging man candle as we call it. And after that, it just made this large red candle. If I were holding any position in this, I would have just exited right here. But because now it's already corrected pretty deeply, so I don't see any reason to buy this stock right now. India Cements, you can clearly see I have made some drawings here. Let's look at the monthly chart, because this level has been acting as a resistance since 2008, and it was sort of making a nice ascending pattern over here. You can clearly see the stock was nicely and steadily moving up. It tried to break out multiple times over the last 6 months, but every breakout did not sustain on the monthly candle. And now it's finally broken this whole support trend line that was following since August of last year. So if this level of consolidation between 160 and 155 does not hold, then we will see fresh weakness in the stock. Otherwise, currently the stock looks very weak. Looking at Superjeet Engineering, again similar story, nothing really happening here. Let me switch over back to the weekly chart. This also looks like there can be a sort of a head and shoulder pattern here as well. You can clearly see this is the left shoulder, this is the head, this is the right shoulder that is forming. If it gives a closing below this level of 288 rupees, then there will be fresh weakness in the stock, so better to avoid this. And now let's look at the last chart of the day, which is Vijaya. We have seen a lot of charts, we didn't find much opportunities, and I think most of the stocks will be looking like that only, so we're going to keep the session short. So if you look at Vijaya Diagnostic, recent listing, listed in September 21 last year, and it looks like it's corrected massively in the month of January. As we can see, from Jan till Feb it corrected, then consolidated here, and now again it's given a closing at its lowest level, so this stock is also weak. So overall the market structure is not that great. There aren't too many trading opportunities available that we can find. Before we would find at least 4 or 5 trading opportunities every week, but now the market is really looking in a bad state, and there are plenty of shorting opportunities if you're a short seller. Since I'm not, since I only take cash markets for long positions, so I'm also just sitting and waiting for the right opportunity to come. Whenever my stop loss gets hit, I exit the stock, and as long as the SL is not hit, I keep holding the stock as per my levels. So hope you enjoyed watching the video. Please, giving a slight disclaimer, none of this is investment advice or selling advice. Kindly consult your financial advisor before taking any positions. Thank you for watching the video, and goodbye.